Hi, this is Fritz Meyer on May 14th with a wrap on this week's economic data, and there wasn't a lot this week. However, here you can see the Small Business Optimism Index reported on Tuesday, and I guess the summary here is that the index has increased 4.8% over the last 3 months since January. The current reading is almost 2 points above the historical average, but a long way off the record high reached in August of 2018. So good news here. We're seeing gradual recovery in the spirits of small business owners. The other data released this morning was April retail sales, and you can see that no change month over month, but this incredible surge in retail sales is what is noteworthy. And here we're looking at total retail sales, and then stripping out gasoline sales, you get retail sales ex gasoline in the red data series. So no change month over month, but coming off of an extraordinary surge in the March number. Interestingly, I was just reading that the restaurant and bar sales are just 2 percentage points off of the record just before the COVID hit. So restaurant and bar sales are recovering nicely with the reopening of the economy. But again, this is a pretty incredible chart. It just and I guess, I mean, I can't really explain it. It's we've had this, this incredible surge in retail sales during this pandemic, which is just so counterintuitive. And it's been good news for the economy, of course. But you can see the long-term trend rate of growth in retail sales. And then you can see the COVID behavior of retail sales. So pretty amazing. But that's it for this week.
Any thoughts on inflation? There's been more inflation fear, it seems.
Yeah, and I think, as I said in the webinar on Tuesday, I think what's going to happen is we're going to have increased readings on inflation for some period of time, and whether or not they prove transitory is a good question. And economists are debating that. But the Fed's policy line, of course, is that higher inflation readings will prove to be transitory and they will die back down. And I think from a market standpoint, we're going to continue to be, that's going to be the headline story for some period of time to come. And the inflation numbers are going to keep coming in hot for a period of time over the next several months, I believe.
That speech that I emailed you by one of the Fed governors says that that inflation is going to run north of 2% for many months before anything is done about it.
Yeah,
they're not going to budge this time, and it's kind of like that picture I showed with "we won't get fooled again."
Yeah,
they're doubting Thomas, as he said, when they see on inflation.
Yes. And it's going to come in, probably well north of 2% for some period of time.
Yeah, well, right, closer to 3% then, huh?
Yeah, or more, on a year-over-year rate of change, because you're coming off of a depressed base, and so and people say, yeah, but pay no attention to that because you're coming off of a depressed base.
So it's a very gutsy move, isn't it?
It is. And I think, and what's going to rock the market, of course, is people thinking, well, that's what they're saying. Let's see what they actually do after a period of time. And so it's going to be the front and center story. And that's why I think the stock market is going to continue to react to that. And, so on the one hand, you have the push higher with the incredible strong earnings story. In the other direction, you have concerns over higher inflation, and that's the dynamic in the stock market. Is this push-pull it's almost like a tug of war that's the image in my mind. And so
climbing a wall of worry.
And so if the stock market makes no net progress over the next 6 months, I won't be surprised, just because we're going to continue to alternate. Like today, so NASDAQ's up, 2% today. Well, it was down 2% the other day. And so it could continue to be this push-pull in the stock market as people alternate in what they're focused on. The earnings story, the powerful earnings story, is not to be underestimated. I mean, that is really incredible. I talked about that on Tuesday's webinar, but the incredible number of upward earnings surprise, a record number of upward earnings surprise, and the fact that earnings this year are going to come in a lot stronger than anybody had dreamed, 4 or 5 months ago.
You just got to keep using the word unprecedented. It's just like,
yeah. No, that's right. Like just, this retail sales chart, unprecedented. You've never seen, this chart goes back to 2005. Well, you've never seen anything like this in a year-over-year move in retail sales. And so there's just a lot of unprecedented things.
Yeah, and even if you go back, I would imagine, in modern history,
you're not going to find this. You're not going to find anything like this.
What do you think of the Fed's move, this bold move to say inflation will prove transitory ultimately, that gutsy move to stick with a policy and let the economy run hot and let inflation? At what point does that end, and what's it do to the stock market? I guess you said it's just going to be maybe going nowhere, sideways for 6 months because of this.
Yeah. Well, as I said on Tuesday, I think it takes a lot of guts, and I use the word hubris, but whatever the right description, I just don't think they can say with any degree of accuracy that it will prove to be transitory. Inflation in the end has a lot to do with psychology. It has a lot to do with expectations, consumers' expectations. And after 6 months of red hot inflation numbers, who's to say that consumers' expectations won't have changed?
But presumably, Fritz, they know all this. And yet, I mean, could it be that they actually, do research into, like you say, the psychology of inflation and really have a firm belief in how this is going to turn out?
Yeah, I think they're winging it. I think that they have their inflation models are really suspect, and we can say that because we have evidence to suggest that their inflation model was broken to the downside. In other words, they were relying on the Phillips curve and actually raising rates in anticipation of higher inflation, which didn't materialize. And so conversely, I don't think you can say that they know or they have great predictive models for inflation. And therefore, this whole notion of inflation being transitory is really suspect in my mind.
Yeah, I mean, they're assuming that it's like deep in the consumer psyche, and that right? Don't you think that?
Yes.
And I mean, and I wonder if that's a measurable thing, and that because they saw that in recent years, for the last decade, the stubborn.
Now they're extrapolating. They're extrapolating.
Yeah.
Would have been really low inflation expectations, and they're saying, well, that will continue. And I'm thinking, well, that could be, but I don't think you can say with a high degree of confidence that it will be.
Right. Well, great stuff.
Times, as you said, unprecedented Fed policy, unprecedented activity on the part of the Fed, but we'll see where it leads us.
Okay. Thanks for that, Fritz.